You are now tuned in to The Money Zone with your host, Folasade, the accountant for entrepreneurs. The time is now, your future waits, your money matters, make no mistake, it's not too late to dominate, so don't delay, get your money straight. The money zone, together we'll achieve your goals, we're building wealth, you're not alone, so don't delay, get your money straight.
Hey guys, welcome. It's your girl, Folasade, the accountability accountant, guys. I am so excited to be with you on this amazing Tuesday. Look, we got a lot to talk about. It's been like, 7 days since I last seen you, right? Like 7 days? Okay. And a lot has happened. So on tonight's show, we're going to talk about why some of my clients ended up receiving the PPP loan and why some clients didn't, and why some of you did, and why some of you didn't receive the PPP loan. And then we're going to talk about the forgiveness aspect of it. So I have like frequently asked question freemium that I will be sending out to my mailing list. So if you're not part of my mailing list, this is the time for you guys to join it so you can get all of the details and scoop about how to get your PPP loan forgiven outside of tonight's show. So if you know someone that have received a loan or have applied, or I'm talking to you and you've received the loan or you've applied for the loan, then you want to tune in tonight's show. So don't forget, look, share the video, tell a friend, and I'll look forward to you after we take this quick break. So we'll be right back. Hey guys, welcome back. So like I said before, I had to go to a quick break. Tonight is all about the PPP loans. How did some clients get approved? Some clients didn't. Some of you did, some of you didn't. And what's going on in the landscape. So right now, let's really be honest. There is just so much juiciness going on right now regarding the PPP loan. So what I mean by juiciness is all of the frauds with the big banks, and then all of the personal relationships. And then, guys, do you recall when they said that a company ended up getting $50 million and the location was vacant, like non-existent, a ghost company. So like there's just so much going on with this PPP loan. So first things first, what is it? We talked about it, but I'm just going to give you a brief recap. It's the Paycheck Protection Program that was implemented because of the CARES Act so that you can retain your employees for at least 8 weeks, okay? So they were giving you funding up to 8 weeks equivalent of your employees' payroll so you can maintain them, okay? So what happened? The money went out, all of the fraud game happened, and now the funds was replenished, and guess what? Everybody was able to apply. But guess what's happened? Many individuals have been able to get approved, but so many other companies have not. And so I was wondering, does this have anything to do with the fact that everybody and their best friends ended up getting loans? So if you had a personal relationship with your banker, you had a better chance of getting your paperwork in a timely manner, first off, and then also getting approved for the loan. And so right now, individuals are like, how come I didn't get approved? I'm getting declined. So first things first, the information was rigged. And I told you guys this, well, the requirements were rigged. And I mentioned this to you guys about 4 weeks, 5 or 6 weeks ago, when I first started dissecting the policies, that things were rigged because they weren't specifying certain things, like what exactly is the credit rating requirement that the CEO or the owner must have, what level of profitability should a company be at, what is the average amount of employees should a company have. They didn't give us any of that information. They just said if you have 500 or less employees, you can apply. If you didn't have your business, if it wasn't illegal, if it wasn't this, it was just so broad, right? And then now what I'm finding is they are actually really truthfully declining businesses for the PPP loan. And here's why. So as you guys can see on my screen right here, I have an article from NPR, and I really love their site, npr.org, right? And the article states, not so small businesses continue to benefit from the PPP loan. Okay, so as we just said, everybody and their best friends and their brother and sister was receiving the loans. But what's happening to the small business? When they end up getting these loans, it's taking away the actual funding that is available for smaller businesses. So you have individuals, okay, like this individual in this article, she stated that she ended up getting declined. She didn't get her paperwork in a timely manner. It was just so many different reasons. So here's 3 reasons why some of you did not get approved for the PPP loan. Number 1 reason, your business wasn't profitable. So when you submitted your PPP application and they asked you to give you your annual payroll, okay, or the net income amount for the individual Schedule C, that bottom number was either too low or was a negative, okay? So number 1, your business had to be somewhat profitable. Number 2 reason, your business had to show its capabilities of repaying the loan. Could you repay the money back? If your business numbers, your Schedule C or your tax return or your 940 or 941 or any of the documentation that they requested looked like you couldn't handle repaying the loan back, then you were also declined in receiving the funding. But what also frustrated me the most was they didn't say what level of credit rating did you need to have. So like, for example, if you need to buy a home and you ask the lender, what is your minimum credit rating requirement to buy a home? They're going to say, oh, for our FHA loans, you need this 680, or for our conventional loans, you need a 720. Or for normal business loans, they would even say, okay, well, the owner needs to have a net worth of 500,000, or the owner needs to have 3 months of reserves in the bank account, right? But they did not specify any of those terms. So everyday small businesses. So that's like your convenience store down the street. That is your moving company, your plumbing company. That is even your online entrepreneur has been receiving declination letters simply because of these reasons that I'm talking about today. The credit rating, okay, repayment capabilities, all right, and then your level of profitability. But guess what? That wasn't it. If you were like Tina in this article, and I'm about to share the article now, she wasn't able to get her paperwork in on time during the initial wave of applications. And many people didn't. And so here's why. And so there were so many not to say sob stories, but from the behind the scenes, being an accountant and working with clients and stuff, and doing the bookkeeping, it is sometimes very challenging to get the paperwork that we need to do the work. So when it was time to go and apply for loans and stuff, this may have happened. Now, this person in the article didn't state it, right? They didn't state that they didn't have their bookkeeping in order, or that they didn't have this. They didn't state that, right? So I'm just giving you an assumption of what possibly could have happened if her paperwork wasn't submitted timely. She probably didn't have her numbers in order. So let me just read you the article really quick. It says, Trish Pugh started an Ohio trucking company with her husband in 2015. Even for a small business, it's small. They had 2 drivers, counting her husband, until they let one go because of the coronavirus crisis. And so her company applied for a loan under the first 349 billion round of the Paycheck Protection Program, which the federal government has set up to rescue small businesses. It didn't go so well. First, there was confusion between her and her banker and the Small Business Administration over what forms were needed. And so Tina wasn't the only one. What had happened was the regulations wasn't up to date. Like, the policymakers would say one thing, but they wouldn't convey it to the lenders, and then the borrowers didn't know. It was just so much chaos. So I understand that part. And then she said, and then once she did, she soon found out that she had missed out on the money, right? She had missed out on the money. So she said, I clicked on the website and it tells me that I have to reapply when more funds are available. I was devastated. She said, not only did that first pot of PPP money run out in 13 days, but self-employed people like Pugh were only able to apply 1 week after the program opened. That put them well behind other businesses in the first come, first serve program. And she's right. If you were self-employed, your submission date was around 7 days after normal businesses. So our average small businesses didn't stand a fair chance. If you wasn't an S Corp, or if you wasn't a partnership or corporation, you couldn't apply. The sole proprietor, the LLC, single member LLC, okay, and the independent contractor didn't have the capabilities of it. So she is 100% right. The system prevented you guys from being eligible in that sense, because what? It wasn't okay, everyone is able to apply. First come, first serve. It wasn't set up like that, okay? She said, we're basically getting ready to lose everything, and it's really sad because we did this all on our own at first, Pugh said, and she prepared to apply for the second round of the program, which has $321 billion in funding. Now that we need help, we can't get help. Fugue has since updated NPR that she ended up getting a loan of just over $10,000. It will help, but she's not sure how much longer that will keep her business running, keep her business afloat. So she ended up getting funding, but so many small businesses right now are not getting funding simply because of those different factors that I mentioned. And so here is an example of, give me 1 second. Here is an example of one of the declination letters. And so that they're sending out, okay? So it basically says, oh dang, I can't even see it, y'all. Is that bad? I cannot even see it. Oh, it says, thank you for your recent paycheck protection program. We regret to inform you that after careful review, careful consideration, we were unable to approve your request at this time. Insufficient credit history for authorized representative of applicant. Our credit decision was based on a whole or in part on information obtained from the Credit Consumer Reporting Agency. And so why am I showing this right now? First of all, credit should not even be a factor in this particular case. If the business is profitable, if the business shows that they have a repayment capabilities, right? Why are they taking into consideration the owner's credit? Okay, like these are unforeseen circumstances. No one was prepared for this. They wasn't prepared. It just seems like, oh well, they're picking and choosing which applications that they want to accept. And remember last week we talked about Ben's Chili Bowl, the iconic business that didn't get approved. And it seemed like as soon as we finished the show, guys, I ended up getting an ad on Instagram that said that they ended up kind of like all of their fans like rioted, sent emails. They must have flooded the SBA and flooded the bank and raised hell because they ended up getting approved. So their tribe, their community is what saved them. So why did some businesses get approved? Here's why a few of our clients did get approved and a few of our clients didn't get approved. I don't see a consistency in industry. Okay. I don't see a consistency in industry, meaning that they declined online entrepreneurs or they declined brick and mortars or government contractors. If you guys don't know, we work at my brick and mortar, we work with government contractors, online influencers, beauticians, hairstyle salon owners, mechanics, doctors, nurses, almost quite a bit of different industries, right? And so when I compare all of the different industries that did get approved and the ones that didn't get approved, it's no consistency. So it's not a direct pattern. Also, some of the companies that did get approved was that received the declination letter that was declined made more money on paper than the other companies. So I didn't see a pattern in that. But you did have to be profitable. Also, it wasn't industry specific at all. So some of my online entrepreneurs ended up getting approved. Some of my brick and mortars ended up getting approved. Some of my brick and mortars ended up getting declined as well. And so what I realized, it was strictly really up to the bank's choosing. All of them each had different banks as well. All went with another third party. But what I found was, and you guys may want to jump out and do this, is that even if your main bank declined you, by the SBA expanding their lending options, as we discussed, I need to start knowing what episodes. Like I may have to tell my team to go back and count the episodes. That's what we're going to do. So I can be like in episode 15 or episode. So in 4 episodes ago, right, I mentioned to you guys that when you go and I just forgot my whole train of thought. When you go and submit the paperwork, right, they don't really ask you so many. They ask you for your NAICS code. They ask you for your revenue. They ask you for an amount of employees. And even some of my online entrepreneurs that didn't have employees, just being the sole employee ended up getting approved. So what I found was when your main bank decline you, go with a third party. Go with like PayPal or Cabbage or some other company. Do not put all your eggs in one basket. Go out and apply for alternative, okay? Because remember, each bank have their own lending cap. So to be really honest with you, they may not want to tell you personally that they've reached their lending cap, right? But they will tell you that, we have insufficient information, or your credit history didn't meet our requirements, and so forth and so forth. But they rarely mention a lending cap on an individual basis. So in that particular case, I didn't see a pattern in that. But what I realized is that everybody that did get the money had their stuff in order. Okay, so that means I was able to get the Schedule C out. The taxes were kind of already pending on my desk at the time. Or when I called them frantically to get the remaining information, they were able to provide it. They were also able to think quickly on their feet because it was so crazy. It was difficult to wrap all of our heads around it. I was reading the laws. Paula was creating worksheets and doing this. It's just crazy, right? Okay. So if you didn't get approved or receive the declination letter from your primary bank, my recommendation is to go with a third party. Remember, every bank have their own lending cap. As long as the SBA don't run out of funding and your bank is capable to lend, right, then you have a fair chance to get approved from a third party. But if your bank is like Wells Fargo that might shut down, then guess what? You might run short. But I did hear some good things about Wells Fargo as well. So guys, that's kind of how people, my clients and some of my fellow colleague clients were able to get approved. We were able to get their stuff out on time, had the repayment capabilities, their taxes were filed, or they had everything in order, and they wasn't in the midst of a major transition. So for example, if your business is converting from an S Corp from an LLC, single member LLC, to an S Corp, and this was the first year that we will submit the S Corp with the form, right, to get the election approved, then that kind of complicates everything. So those individual clients that were in the midst of transitioning their tax structures during this time may have received declination letters because the tax paperwork was confused, or they didn't have the payroll set up to show them that they're on payroll for the first quarter. And since they didn't have a Schedule C for 2019, it just confused them from not qualifying to be a scheduled self-employed individual. So a lot of businesses that were in the midst of transitioning or changing their business entity structure ended up putting themselves in a bad state as well, which that's part of saving money and really maximizing growing your business. So, but by default, because of what's happening and the pandemic, it's like they got rained, their parade got rained on. So they're trying to save money, but it may also prevent them from being able to get funding because their tax situation gets a bit complicated. So I can see some businesses with the S Corp election that's been recently submitted may have some difficulties possibly getting approved as well if they didn't set up their payroll and stuff. So my recommendation, if you're doing the S Corp election and you're trying to apply for the PPP or whatever, make sure you go ahead on and start filing your quarterly 941s and stuff, because they will ask you for that when you go to submit your paperwork, okay? So guys, I know that was a mouthful, right? But don't forget, if you want to get more details about what I'm talking about, head on over to bit.ly/Folasade TV, scroll down to the bottom and subscribe to my mailing list. My team is going to be sending out our FAQ and our forgiveness Q&A to our mailing list. So if you have any questions pertaining to that after tonight's show, then you want to join my mailing list so you can get access to the freemium. And for all of my clients, You all know we have the worksheets that we've already created for you guys to calculate it and manage your forgiveness part of your loan as well. So look out for your email. So guys, look, subscribe. Don't forget to share the video, because when I take a quick break, I'm going to come back and talk about all of your questions regarding the forgiveness aspect of the PPP loan. So my recommendation is to share the video, add a friend, and guess what? Tell them they need to tune in, okay? And we'll be right back. Hey guys, welcome back. So if you guys are just tuning in, I'm Folasade, the host of The Money Zone on RipRadioNetwork.com. Guys, go ahead over to the show and watch the video, share it with your friends and everything else. Each and every Tuesday at 7 p.m. Eastern Standard Time, we talk about everything trending about money, your business, bookkeeping, taxes, tax deadlines, the Black culture, mommyhood, familyhood. Like, it's a variety of stuff. But what I realized, the trick is this: everything that you do and don't do affects your money. So that's why we talk about it all here on The Money Zone, because in the end, if you're not productive, if you're not rolling, then you won't be making money. So on today's show, we were talking about the PPP loan. Why did some businesses get approved? Why some businesses didn't get approved? But now, honestly, internally in the office, I am shifting our efforts from application status, which we are still submitting applications for clients here. However, I'm shifting our efforts from applications to now making sure that my clients are able to get the loans as much as we can possibly do, y'all, forgiven. So I know many of you have probably Googled your life away, because I get the questions in my Facebook Messenger, my IG, and my emails asking, like, okay, even my clients are like asking, when I ask them apply for, well, how am I going to get the loan forgiven? And I'm like, honestly, I wouldn't even be concerned about it getting that much forgiven, because I know how hard I'm going to work and I'm going to make the money back, and it's a 1% interest rate, right? That's how I think. But I know many of you have a lot of burning questions. So what we're going to do, I'm just going to read off some of the questions, and then I'm just going to read off the responses to. And guys, so everything that's on this sheet that I talk about right now will be in the freemium. If you join our mailing list, you will be able to get access to when my team finished putting it together. So how do I ensure that my entire loan is forgiven? Okay. It says unless you add employees, or keep the same amount as compared to last year, then it will be very challenging to get the loan forgiven 100%. So that means you need to stay at the same employment level. So because they are tracking things through the FTE, full-time equivalence model. So remember when they started having us track the health insurance a few years ago for that Obamacare, right? So they had to start to track the health insurance at that time. But what you guys don't understand is that on the back end and accounting side, payroll side, we had to track your full-time equivalent employees. So if you had 15 employees, all right, and 5 of them was full-time, okay, and the other 10 was part-time, what is your full-time equivalent? So between all of the hours, how many in the total amount of employees that would be considered full-time? So it wouldn't just be the 3 that's full-time. What will happen, it will end up maybe being 4 or 5 full-time equivalent employees if some of your part-timers worked quite a bit of hours. So the model is this: you have to keep the payroll at the same level, okay? And it says this is because the 2.5 months or 10 weeks or so that they're giving us, right? You need to spend that on payroll. So if they give you $100,000, right, based on $40,000 on payroll that you spend every month, in 8 weeks, that totals roughly $75,000 in payroll. And honestly, the other $25,000 is your rent and everything else. To get the loan forgiven, okay, your payroll needs to be at that 75%. So if you get 10,000, your payroll expenses needs to be 7,500. If you get 100,000, your payroll needs to be 75,000. I hope that you guys get it, but if you don't get it, don't forget. We also have this on our resource page in our Coronavirus Resource Center. All right. So that's the thing, to make sure that your loan is insured, surely 100% forgiven. Make sure that you stay with the same time of employees. So I've been getting this question as well. Should I pay my staff to sit at home and watch YouTube videos and do TikTok dances, right? All right. So the issue is this. If you don't want to have to repay the loan, then yes, pay your staff. Okay? And then that portion that you pay them will be forgiven. Well, could be if it's done right. Okay? However, it still makes sense to have them do things at home. So the people that you are able to retain, don't look at it as if you're just giving them free money. Start to have them do work. Figure out how to pivot. Actually have them pivot the business, okay? So you just have to change the mindset, because if you don't pay them, then whatever portion of the PPP loan that you ended up receiving for their part of the payroll, you will have to repay that. Or that amount can be so significant that it mess up your full-time equivalence calculation, and then your payroll expenditures end up falling beneath the 75% threshold. And so that's where it gets pretty tricky. It's not personal, guys. It's all about the business. Okay? All right. So how does quarterly or monthly payroll fit into an 8-week window? So one of the biggest unknowns with the PPP loan forgiveness calculation is the concept of cash versus the accrual basis. So if you guys don't know, in the accounting industry, there's two main type of accounting, okay? Cash versus accrual, and then you do have the tax basis way as well, okay? In cash accounting, revenue and expenses are recognized on the date that they were received or paid, all right? And cash in, cash out, right? But accrual says revenue and expenses are recognized on the date that they were earned, not when they were received. So this is where it gets tricky. By the time most of you receive the PPP loan, you already have accrued, meaning accumulated, past accumulation, right, of your payroll expenses. So let's say all of the payroll that I'm going to be processing for our clients tomorrow is for check date Friday. Everybody trying to get paid. Cinco de Mayo today, right? And what's oh, my phone died. What's Friday? Friday's the 8th, right? Okay. Everybody want to get paid. However, let's say you received your PPP loan today. You're not supposed to use it for Friday payroll because that is considered accrual payroll. Now, that may have went over some of you guys' head. This is why having your own accounting, your own accountant is very important, because they will be able to take what I'm saying, but at least you'll have an idea when they start to talk to you of what's happening. But to really be honest with you, this is why it's very important that you guys have your own person that you work with and your own accountant that you're working with directly, because after I give you this information, when I talk to my clients, I break it down even further based on their situations, okay? All right. So another question I've also received, well, what if I don't spend all of the money? What if I don't spend all of the money? So the unspent amount after the 8-week period becomes your remainder of the loan. Okay. Now that part may not be forgiven. Okay. However, because I am what my mentor Patrick Bet-David would say, right? I'm a wartime leader. So I personally, if I'm certain and confident in my capabilities, which you guys should be, regardless of the industry or the atmosphere, in your mind as an entrepreneur, you should be already figuring out alternatives or what to do in your business to stay afloat, or which direction your business should be pivoting into right now. So even if you did get the loan and things don't look right in the business, you can use that funding to pivot. See, a lot of people right now are only focusing on the funding to retain the payroll. And I am telling you guys and telling my clients, don't only think about it like this. Don't only think about it in the sense of paying your staff. Think about it as if being an opportunity for you to scale and grow your company off of OPM, other people's money, at a 1% interest rate. You will never in your business lifetime ever get money at 1% interest rates. Every loan I've ever seen prior to this pandemic has been 8, 9, 10, 15, 20, 25. Yes, I've seen 25% loans, 33% as well. So in that particular case, because I'm a hustler and I know how to make money, I'm thinking like, oh, bet, right? If that's how you guys should be thinking. So even if the money exceeds the payroll, or even if I don't have to pay my rent, I'm going to be able to make this money back twofold. See, that's where it gets complicated. And this is why so many people didn't get approved, because that's really what they want us to do. They don't want us, and see, they specifically won't say that because the policy behind it, the whole policy is for you to retain your employees. But from business person to business person, in the back of the lender's mind, they want you to be a wartime leader, and they want you to go out and hustle your butt off, and they want you to go out and make the money twofold. They do not want you just sitting back, oh, let me write my payroll. Oh, let me pay my rent. and let me hold on, right? Hold on. No, they want you also to hold on, brace yourself, but go up the roller coaster for the ride. So they know they can get their money back at their 1% entrance. See, right now, the banks did get money from the SBA. And so guess what? That's part of the money. That's half of the money. They also want the other money, which is the entrance that they will receive. And if you think about it, guess what? My calculator may not even be big enough, right? Let me see what this is. If you do $100 million loan, right? That's $1 million in entrance. So they also want their entrance. So the banks do not really want to give funding to people that are not going to make it happen. Remember Noah's of the ark, right? How Noah bringing in all of the doves and all of the different animals, right? Same thing like us. They're trying to figure out what businesses will be save and will recreate and innovate our ecosystem. Do your business fit within that class? If it doesn't, that means they won't lend you money. So right now, we really have to ask ourselves, are we just in the business to, make a little $100,000 and pay my staff, and I only got $30,000 left for my lifestyle, and the business only show a profit of 2,000, and I'm happy? Like, that's not where we are right now. Right now, we need everybody to make it happen. So if you have anything in your arsenal, any confidence, grit, whatever you need, pull it out so you can push it to the limit, because that's what we need. We don't really need, and the banks can't really say that, but they want you to pay it. They don't want the default, right? Okay, so another question is I'm getting, is my loan that I received taxable? So no. Any loan that you've ever received, ever, and I see this happen countless times on tax returns from people, one, that lack the expertise that they state that they have, but then also individual taxpayers like you yourself that attempt to file your taxes on your own. You overstate your income with your loans, okay? All right. And in this particular case, your loan isn't taxable, and also in every other case as well. All right. So no, the PPP loan amount is not taxable. However, the IRS just released regulations stating that any monies, and see, this is where a lot of you are going to get tripped up. If you don't have an accountant now and you're trying to get this PPP money, or you got it and you're not doing your bookkeeping, you're going to catch yourself up, because according to the new regs, if you use the money, the loan proceeds for expenses, then those expenses become non-deductible. Okay, so you have to have your bookkeeping in order to properly track what was spent from the PPP money. So you will know that those expenses are not deductible. So the problem that I have with that is this. And there's so many different problems, so we'll talk about that on next episode. But don't forget to also go to my website, bit.ly/Folasade TV, and go and get on my mailing list so you can get this FAQ that's going to be sent out and updated on our website, on our Coronavirus Resource Center. So what I'm finding is that so many people are trying to do things themselves and really hurting themselves. And this is a time that your lack of an accountant, your lack of having solid accounting in order is going to mess you up, and it's going to end up making some of your loans unforgivable because you didn't do it, or a lot of your expenditures non-deductible. Okay? And so, or you're going to be claiming income and claiming stuff that you're not supposed to, and going to get yourself in some stuff. Okay. So the problem that we're having now is that as many of you have tried to skip your accounting, like I get it all the time. Why? I don't need my financial statement. I don't need this. They're making you guys need accounting regardless if you like it or not. I can't wait until they make you all have to have a bookkeeper to start a business, because the minute you had your accounting in order. So yes, we can blame the pandemic. We can blame everybody. But in all actuality, this is the time, regardless of your loan being forgivable or unforgivable, this is the time for you to get so intimate with yourself and really figure out what it is that you really want, because we're getting a second chance to completely go around and change the rules and change our lives and change the trajectory of our legacy. So it's now up to you to start to do what's required, because the playing ground is even now. Everybody has Wi-Fi, everybody has internet, everybody has Facebook, everybody has Instagram. We all equals now. What are you going to do? And that is what the banks are asking you guys, and that is what the SBA is asking you guys, and that's what your boy Trump is also asking you guys. This is why he's talking about make America great again, not. But in the respects of business, he is asking that. And I'm asking of you guys to go out and push it. Do not wait for a loan. Don't wait for a miracle. Don't wait for anything. This is the time. I always believe that there's a blessing in disguise in every tough situation. So if you can deal with death in your family, if you can deal with you losing your home, or whatever you did to get to where you are, then you have enough push to get past this pandemic. So if I were you, I'll do 3 things. Make sure you head over to my website and grab the FAQ so you can make sure that you try to get your loan forgivable. Number 2, I will go and try to become a wartime leader. Go into YouTube, type in wartime leader and Patrick Bet-David. Watch that video so you can understand that. And the 3rd thing that I would do, get my numbers in order. So I won't be waiting on a loan, because see, this is the thing. In real life, y'all, we supposed to have 6 months of savings. Real life, right? Real life goals. We supposed to have 6 months of savings. So the pandemic shutdown started, what, March? Middle March? We should still be good. Oh, right? So yeah, guys. So I'm your girl Folasade, the accountability accountant, guys. I love today's show. Hopefully you did too. Please don't forget to tell a friend to tune in, and hopefully you took some notes. All right. And I hope to see you. Go head on and head to my website and download all of your freemiums. And don't forget, if you are looking for exposure for your small businesses, especially for all of my brick and mortars that do not have an online presence, we are finally opening doors for more sponsorship opportunities here on the Money Zone. So as soon as we open up the studio, we will be able to promote your businesses on my platforms. So if your business is struggling with visibility, or if you just want to be aligned with me and my company and my brands, this is the opportunity for you to get your business out there. So if you're interested, go to my website as well, bit.ly/Folasade TV, and message me, and my team will get back to you. All right. All right, guys. I will see you next week, Tuesday, 7 p.m. Eastern Standard Time. Don't forget to bring a friend, guys. All right. Have a good night.